Let's talk about the power of cash flow. Cash flow allows you to control and acquire assets with little or no money out of your pocket. I'm Justin Hitt with Sustainable Wealth Secrets. If you want to build up wealth now and turn income into net worth, then listen very carefully. This is a unique and a perspective that basically most people don't talk about. And it's cash flowing assets in order to acquire and gain control of basically assets. It's like getting gold and making it pay for itself. Now, I don't particularly like gold as much as other people. I would prefer you to have land or real estate. I'd prefer you to have other assets that have high utility value. And that's part of the secret. Now, I heard about this originally from a construction company. And the owner of the construction company, we were talking about an excavator. And he was basically saying he's going to get another excavator. But he wanted to find customers to pay for it. That's the first lesson. He didn't just go buy an excavator, then try to find customers. He found customers and then got the excavator with the customer's money. So he was already doing plumbing work, and they had an excavator that could trench out a certain depth, and he wanted to get an excavator that can trench out even deeper because from time to time he had to lease one, and he calculated that if he had a certain number of customers with a certain category of project that he could pay for an excavator in its first year. See, normally people will buy an excavator, $100,000, $200,000. They'll make payments on it for 5 years, and then they'll have a piece of equipment paid for. But he wanted to pay for his equipment in 12 months. That's the next lesson. You want to figure out how to pay for the asset in 12 months or less. Why do you want to do that? Because if you can pay for that asset in 12 months and you completely own it, then you're able to then have every dollar it produces as profit. Now, depending on your tax situation, and you're going to talk with a CPA about this, there are cases where you may want to lease rather than own. This particular plumber, he wanted to own it because he knew that if he bought a quality piece of used equipment, and he already had equipment, and he already had a mechanic, that he could get it paid off within 12 months using the customer's money by doing a specific type of plumbing job. And basically it's sewer lines and septic tanks. And then he could have this piece of equipment that could dig deeper than the equipment he already had, and that would expand his customer base. Now, one of the things that he needed to do, because he didn't want to drive the equipment all the time, is he had to factor into his costs. So the cost of equipment plus the cost of an operator. And that operator he wanted to have full time because he estimated that after a certain number of jobs, which is about 60% of the operator's time, that he could just take it a little bit extra to hedge on his 12-month break even. That's another lesson. You want to always be conservative about your numbers. If he's going to make $20,000 per job and the excavator costs $150,000, he can figure out how many jobs he needs, but he pad it with a few extra jobs and also estimate the time per job so that he knew whether or not if he hired somebody, he wouldn't have to lay them off in a couple months because he'd have enough jobs for them. He built a marketing campaign around the fact that he had this excavator that could dig deeper, it could do better, and he wanted to wear this excavator out. He wasn't going to buy it and let it sit around the lot and brag to his friends about how he had this big giant excavator and how it could dig deeper than any other excavator and how he could potentially do this type of job. He lined up the jobs in advance and built a backlog, which again is another lesson here you should take away, because he wanted to make sure that beyond a doubt that piece of equipment would be paid off within 12 months, that he would be able to pay the salary of his operator, and that if his operator got sick, he would be able to have a new operator come in, or he could have 2 3/4 time operators. Now listen carefully to what I'm sharing with you. This can be done on paper before you buy the excavator. Because I do know quite a few businesses that used to sell fuel, and I work with a lot of industrial contractors, electrical contractors, plumbers and such. And I do know guys who would have equipment that had dust on it. And it wasn't dust from out working. It was dust because it's sitting in a warehouse taking up space rather than being dropped off at job sites. The key to understand here that he's buying an asset, which is the piece of equipment. Now, normally a piece of equipment depreciates and it's not an asset. It's a big liability. It has holding costs because he took the holding cost, because he took the operating cost, because he took the lease or the payment cost or the opportunity cost associated with the money he used to buy this piece of equipment. And he packaged it all up and took it down to a bank to get a second opinion. And he did all this on paper first. He knew that he was going to have a certain amount of dedication for this equipment, which he went ahead in advance, got customers for. Because remember, you can just lease the equipment as you need it. He got to the point where buying the equipment was less costly than leasing the equipment. But again, he turned this liability, which is normally a piece of equipment, it's a liability. It has wear and tear, depreciation, all that. He turned it into an asset because he attached the customers to it. And then he added the operator to free up his time, because a lot of folks, and this is, folks, you must have a sheet of paper out writing these down. Here's another cost that most of you don't consider. Most of you are looking at you operating the equipment, you doing the work, he arranged delegation before he even got the equipment. And because he can put an operator on a piece of leased equipment, right? And so he focused his time on getting the customers who are paying for the equipment, somebody to operate the equipment so he can get more customers. And then, of course, these types of jobs fed other jobs in his plumbing company. Now, you don't need to have a plumbing company. You don't need to get an excavator. You don't need to work out this scheme with a piece of equipment. This works with land as well. I did a little bird dogging for somebody. I found him 100 acres of farmland, 40 of which can grow hay, 50 of which is good timber. The rest is not as useful, but ultimately, I know for a fact that he can net $1,500 an acre for the timber. I know that he can grow at least one bale of a round bale hay, which is worth $65 on each of those acres of field. And you can just do the math. And even before he buys the property, we can figure out for every dollar that goes out, how many dollars are we going to get back? This is your free net cash flow. Now, if you put out $1 million in cash, now I know a lot of you are saying, I don't have $1 million in cash. If I had $1 million in cash, I would just sit on it because I get $40,000 a year. No. If you have $1 million in cash and you can put it out and get $1,500,000 back, then you can do that all day. Because again, listen carefully. You put out the $1 million and then you get $1.5 million back. How many $1 million can you put out there? Well, you can literally put out an unlimited supply, whether it's putting out $100 and getting $150 back or putting out $1 million and getting $1.5 million back. It's the same math. The key to understand is that we do it on paper first. We have our customers pay for it. And we have the factors associated, holding costs, taxes, revenue, all ran past a independent third party. You might have, if you have $1 million in cash and you could just pay cash, you still want to run the project by the bank to get a second opinion. Run it by your CPA. Run it by your tax attorney so that you can have a full and complete picture before you make a decision. You want to package these things up so that the day you sign the document, the day you sign the check, you know what the plan is to get the money back. Now, the best plan is something you're going to hand to somebody else. You're going to have a plan. Let's say it's a piece of land. You're going to have a plan where somebody else is going to take care of the land. You built the costs in, and you're going to get yourself a 4, 5, even 10% return on the money you put out. Now, if you finance the property, the money you put out is only your payments for the land. See, because you partnered with the bank who put up the majority of the money, and you're going to buy out the bank over time. So listen carefully. Listen how powerful this is. You're now leveraging the income you have to build net worth, because the right assets not only can cash flow, but they can appreciate. See, that's why I don't really like gold, silver, and those types of things, because you can acquire the gold and you have a holding cost to store it. But the gold doesn't spin off any interest. You can't, trade it with customers so that you can't, charge admission to look at the gold or anything to get additional cash flow with some kind of customer. But you can with a piece of equipment. You can with a land. You can with a business. You can even do it with consulting services. Maybe you've invested time and money into experience and skills, and now you're going to convert that into solutions for specific types of customers. You go out and find those customers, and we can help you find those customers. We have programs that talk about how to position yourself as an expert, but essentially you are now buying an asset, which is your time, because you're going to be trading dollars for hours, and start building that into products, which then you can trade the products for hours. Now, it's usually easier when we're talking about heavy equipment, when we're talking about buying or selling businesses, when we're talking about buying or selling land or farmland, or even partnering with real estate developers. All of this comes together to multiply the money you have at any scale, $100 scale, $100,000 scale, $10 million scale. Multiply it on paper to see what the system is. Develop the plan. Leverage customers' money rather than your own. Basically trade value. Sell something to a marketplace at a slight markup. And then roll all that back in for the next asset. Now, it could be more assets of the same. There's a forest mulcher that I know. He's got a piece of equipment. He could do the same thing as the plumber. If you got another forest mulching machine, got the customers first, add an operator to it, now he can work 2 job sites at the same time. All you got to do is the math on a piece of paper and determine whether or not you're going to have free net cash flow. Folks, I'd like to share more of these insights with you. In fact, I'd like to work with you for your next $1 million idea. I would like to show you how to transform your high income or your high net worth into even more. Now, it sounds like a little greedy, multiplying money all the time. But with inflation the way it is, with uncertainty, it's always better to hedge your future by having a larger nest egg than you have today. Everything will always be more expensive in the future, including my services. But if you have the need or you want to look over $1 million idea, I would love to show you either through some of my other courses or through a quick consultation how you can work out the numbers on paper in advance, conservative numbers, how you can develop a plan, and then where to shop that around, where to go and get expert advice to help you get to the next level. Your CPA, your personal banker, or your branch manager or banker, your tax advisor, they can all look at your plan if it's structured the right way, and they can tell you yes or no. If you've got a plan that has positive net cash flow, that has contingencies built in, that understands the holding costs, then the money is there to help you with your plan. The key is, are you willing to write it down? Or are you just going to fantasy from YouTube video to YouTube video, from podcast to podcast, and dream about this thing? This is how you convert your income into free net cash flow. Roll that free net cash flow into assets that produce additional cash flow, and then we snowball into the net worth that sustains you for years to come, that protects your future self, that provides for your family, that creates financial security, that positions you to be where you want to be in the top 10, the top 20%, the top 5% of wealth in America or wherever you happen to be. The key to understand here is that you can write it down in advance and you can map it out on paper. We've done cash flows from a visual perspective where the money moves through a system. But there's also cash flow from a financial perspective, which is dollars in and dollars out. Then we look at how do we get customers to pay for it, because that's the best way. There's less liability if you get customers to pay for it. But there are times where banks will pay for it if you have the right structure or the asset will increase in value. And finally, that execution of the plan. Go through some advisors, get your team together, and you will get results. I'm Justin Hitt with Sustainable Wealth Secrets. If you have questions about this or anything else we've covered in our podcast series or the newsletter, visit www.sustainablewealthsecrets.com. Ask your questions there. Ask about consulting if that's something you're interested in. There are newsletters and other materials. There's really no excuse today for not multiplying your high income. If you're making $100,000 or more, You shouldn't be still living paycheck to paycheck. There are ways to multiply that money, to get multiple streams of income, to create passive sources of income, to create opportunity. That's what it really is about. Stop worrying about the economy out there and create the best economy right here. Thanks for listening. Again, I'm Justin Hitt with Sustainable Wealth Secrets.